Next, from the state capitol, we talk one-on-one with Illinois State Treasurer Dan Rutherford as we talk about Illinois paying millions more in interest payments, due in part to the state's continuing financial instability, as Illinois has yet to reduce the $85 billion in unfunded pension liabilities. This runs about 25 minutes.
State Treasurer Dan Rutherford, thanks for joining us again on the Illinois Channel.
It's nice to be back. Thank you, Terry.
The topic around the Capitol and across the state really right now is two things, really, Medicaid and pensions.
Right.
I think pensions in many ways are the overreaching issue because it affects so many people and obviously the state budget. I think a lot of people, on the other hand, who either are recipients or perhaps just listening to the news may be wondering, why do we need to change? Why can't we just keep the pensions the way they are?
Sure.
And I'm kind of curious, you know, to have gone from that notion to where the governor, when his budget address said we have a rendezvous with reality. What's changed that has brought pensions to the front burner?
Well, I think it's been a culmination of about three things. And I will admit to you that I think 5 years ago, the general public didn't have a comprehension like I think they really do now. And the three things that brought the state pension system to the point that it is one, past governors and general assemblies did not put in the appropriate amounts that they should have per the 1995 agreement to put it into an actuarially sound situation over a 50-year period. Two is that benefits were raised without the commensurate additional money to go into it, and a part of that also, people are living longer. It's exacerbating the whole system. And the third thing then is the fact that the pension boards had projected returns on their portfolios that didn't attain those. So, you know, you can go back and beat the dog on past governors and past general assemblies, but it's a culmination of those three things. I think then you add, so that's what brought us to this problem. I think then you add that this is also now hitting all across the country. It is also hitting our local taxing bodies. So it has become such a situation that, and for Illinois, because of the amount necessary to put into the pension payments, that it is basically sucking away all revenue. That there is not enough revenue then to go and go to schools or public safety, those kind of things. So I think that it's come to a culmination with all of that.
You know, and the thing is, while you are the state treasurer, you also spent the vast majority of your career, public life,
sure,
in the legislature, both as a House member and as a senator.
And let me also say real quick, though, yes, I did. But I was also, so the reason I can say those things about the General Assemblies and governors, admit that that's what happened, I had my staff pull every vote I took in the Illinois General Assembly after I became the treasurer to know how I would be able to help articulate this. Not one time did I vote for a budget that did not fully fund the state pensions. So now go ahead with your question.
Well, so you have a history is the thing for people to understand. That you have a history going back with the legislature, sure, and how these issues have evolved, and you know the politics of it. But let's talk as far as your role right now as state treasurer. And I'm trying to lay out, I want people to know the broad issues. You can get lost, I think, in some of the nitty-gritty details, and frankly, a lot of what's being talked about as far as the reforms as we tape this are still underway.
Sure.
Issues are fluid. But with the amount of debt, in the unfunded debt in the pensions, the obligations going forward, as state treasurer, you take money in, you have money going out, you have interest payments, and you see all that of
sure,
the state. What is the economic impact that you hear from any of the rating agencies,
sure,
on the state of Illinois if we don't address this pension issue?
You know, and I think just to make sure our listeners understand that there are three rating agencies for bond ratings: Fitch, Moody's, and Standard & Poor's. And Illinois has had its standing with these rating agencies go down. What happens when it goes down it then costs more money when you go into the bond market to borrow money because your creditworthiness is not as good. It's kind of like in an individual. There is no question, but and you highlighted the two at the beginning of the show, Terry, on Medicaid and pensions, is what is being watched right now by the rating agencies. In fact, one of them recently had it as a part of their memorandum when they did the analysis for Illinois, that if these are not addressed, and don't want to put words in the mouth of the ones that wrote it, but basically they said if you don't get this fixed, it will affect your rating in the future. And, you know, talking about, I am not for long-term debt, going out and borrowing money. There are places, though, that it is appropriate under good fiscal management. So, for example, in bonds to build roads and bridges. Okay, that's not borrowing long-term for general operations. And you have the revenue stream, license plates, motor fuel tax that comes in, and it's for capital projects. Well, what has happened is we've gone out into the bond market since these rating agencies have looked at us and given their opinions on it, and because of the ratings, they have actually, it has actually cost us more money to borrow that money in the interest than what it would have been had we've had a better rating. So that will definitely have an effect right here on the economy of Illinois and on the taxpayers and on the state treasury.
If the state were to borrow today, do you know approximately what rate would we be paying?
I can't tell you that directly because there's all kinds. There's general obligation bonds. There's, you know, some of it's for operations, some of it's for brick and mortar. But it is higher than if we had a better credit rating. And we can look at this. In fact, we did this as an analysis for like entities that were going in the marketplace about the time Illinois did for about the same kind of money. And because of their credit ratings being better, they got a better rate than what we are.
And that actually the difference, because Illinois' credit rating is lower,
so much lower.
Costs some millions of dollars, does it not?
Oh, it does. Yeah, tens of millions of dollars, in fact.
I mean, I think a lot of times people, and I'll sometimes pose a question to people about how big is state government and how much, I think they don't appreciate that there are billions and billions of dollars involved. As state treasurer, do you know offhand on average how much you invest on a daily basis?
Again, that's a moving target because, and let me just,
cash flow of the state.
It's the cash flow of the state. So, for example,
by the way, you keep the checkbook. I mean, just simply, what's the state treasurer? You keep the checkbook.
I keep the checkbook. I've got the state portfolio of about $10 billion. I've got the local funds portfolio, which varies between $5 and $6 billion. And this is going to sound elementary, but the three priorities in that portfolio: number one is don't lose it. Number two, have liquidity. And number three is getting interest. And the reason I explain that to you, that's different than other financial advisors may be giving certain people, because, you know, we are very, very, very conservative on the investments of our portfolios. And the reason I said it's a moving target, every morning at 7 a.m. at our trading floor, which is just down the street here, our staff comes in, and we may actually take money into the marketplace for a 24-hour period. We may take at the end of a day for an overnight. We also have times, so for example, when the toll authority has cash that comes in, we receive it, we may invest it for just a brief bit of time for a week or two. We also have, so for example, when the federal stimulus money came in, until that federal stimulus money was spent, we had that, and you can't tie it up for a 1 or 2 or 3 year note. You may be able to only tie it up for a week. So it really is a moving target as well.
As these negotiations are going on as far as what to do, and we hear all kinds of ideas being floated about, is anyone involving your office in the negotiations?
You know, not directly, no. And the way that I have participated is working with the various caucuses and some of the leadership there. But the other thing is that by virtue of my office, and you know, I'm a Republican. I'm proud of it. You know, Pat Quinn's a Democrat. He's proud of it. That's all good and well. But I think because I am the finance officer of the state and of the other party from the incumbent governor, that we are looked at to help give critique and opinion on some of the process that's going through, and particularly on the national stage, because Illinois has the worst credit rating in any state in the country. Some rating agencies, maybe California's, but arguably we're at least 49, if not 50. So the benefit I have is being able to help articulate where I think the importance is on getting this resolved. And I have embraced Governor Quinn's proposal. Now, devil in the details, I haven't seen the final language. I have some real concern about this cost shift away from state paying their part and moving it off to local school districts. I've got real concern about that. But I've decided I'm going to use part of my political capital with the members of the Republican Party across the state and the General Assembly and independents that have been supportive of me, and for that matter, looking at this as being a bipartisan effort with my Democrats to say, we've got to fix this. And every speech I give, every speech I give, I talk about how important this is to the audience and why it's so important, because if you're speaking to those that deliver services for those with developmental disabilities or mental illnesses, that means there's not any more money going to be able to go to try to help bolster those programs because it's going into the pension payments.
We often hear the term is crowding out, that
sure.
If people look at think of a pie chart, we've all seen the pie chart of, in this case, of state spending. What's happened is the allocation going to the pensions has gotten increasingly large, and everyone knows the state of Illinois has had a revenue problem, and that's why we passed the...
Well, no, Illinois doesn't have a revenue problem.
I know, you would say we have a spending problem.
There is a difference between a revenue problem and a spending problem. Illinois does not have a revenue problem.
Fair enough. The thing I would say is, which we pointed out, is that I think the tax increase has brought in the neighborhood of $6 billion
right.
in extra dollars, and which is about the exact amount that the state is paying this year in pension payments. So
that's right.
All of that new money is going just to meet the tax payment, and you can't obviously continue to raise taxes.
No, you can't. And you know, let's lay that out there real clear. The income tax increase, which is supposed to be a temporary one for a 4-year period, that fiscal year, the first fiscal year, almost dollar for dollar was what it took to pay the increase in the pension systems. Now that means none of these backlog of bills, which was debated on the floor of the House when they passed the income tax increase as to why they should do that, none of those backlog of bills got paid down. No opportunity for additional resources to go in growing or to add to programs like education or public safety, none of that. So if this continues like this, you know, in 4 years, now 3 years since the income tax increase, the argument will be it can't go away. And here, the defined benefit program we have in Illinois for the participants in the state pension systems, different than IMRF, in the state pension systems, is a defined benefit. United Airlines had a defined benefit program. You know what they did? They went bankrupt. American Airlines had a defined benefit. You know what they did? They went bankrupt. Caterpillar Tractor had a defined benefit. You know what they did? They changed. And they today are a viable, solid Illinois company. And Illinois state government, per the United States Constitution, as a sovereign government, cannot file bankruptcy. So what will effectively happen is just keep pushing off the bills, and keep squeezing the side of spending of some of the essential programs we have.
To that end, and maybe this is more your legislative hat than the current state treasurer, but and so people just, maybe they know it, maybe some don't. So a defined benefit says,
sure,
if you come to work for me, when you retire, I'm going to give you so much money, basically. It's
guaranteed. Guaranteed.
A defined contribution, which means if you come to work for me, I'll put so much into your retirement this year. Mm-hmm. I can't promise you what the economy is going to do over the next 20 or 30 years, that I could guarantee you.
Exactly. Yeah, it's exactly what it is. Defined benefit says you will be guaranteed this dollar amount, irrespective of the portfolio performance, irrespective of the economy, irrespective of anything, you're guaranteed. And a contribution is, which, you know, the vast majority of the private sector is a contribution from the employee and matching of certain degrees of the employer. Now, let me also quickly say that with this pension reform discussion taking place, I am of the belief that anyone who has their pension vested can't be touched, should not be touched. If someone is in the system already, what they've already got vested or accrued is theirs. It's for the rest of the time they have. And looking at a combination of what can be done in this, both a defined benefit and in some type of defined contribution. And
I was going to say, just to clarify that point, sometimes I think in these in our interviews, people can hear different things, so I sometimes want to hit. So if someone has been working for 10 years, what you're saying is all the benefits you've accrued up to this day,
10,
or the day at whatever point the legislation is passed, you keep, and that is untouched. But the day after the legislation takes effect is when it begins to change.
That would be the position I would like to see have happen. And at that, the time you have left in the system, the 10 years accrued, as we said, what you have left in the system, you will have a choice. You can decide if you want this type of program, that type of program. Because then I think it will pass this constitutional muster that many are arguing out there that says you can't change per the Constitution of Illinois stating that. I believe if you would provide a choice, then it does pass the political muster and it does pass the constitutional question.
You go around, as you said, and talk to groups all the time. I'm sure you talk to any number of, in the business community. People who watch CNBC have noted that you've been a guest on CNBC a number of times. What do you hear from those who are in the business community, both large and small?
Sure.
What level of concern do they have on this issue of the pensions in Illinois?
High. They have a high level of concern because it affects, well, first of all, you look at the income tax increase. Well, I mean, that affected corporations and sole proprietorships, and it went to pensions. And you look at where they are in services of government, you know, that the needs of the services of government. You look at the bond ratings, you see that type of stuff. The business community understands that. And I think that when you look at this, it adds part to the reputation of our state as well. And let me say up front, I'm a cheerleader for Illinois. I think Illinois is a great place to have a family. It's a good place to have a business. We can do things differently and have it better, but it's a good place to have a business. I mean, all the positives. So I don't want to be the naysayer negative, but the reality to it is if we don't address this pension issue, it does have a stymie. It does have an impact on the image of the state of Illinois, and it affects businesses and job creation.
And there's going to be a little bit, you alluded to it earlier, but there's one proposal to cost shift some of the Speaker Madigan about a year ago said 56% of our problem is with the teachers' pensions. There's 5 different pensions.
Sure.
The largest obligation, as he notes, is with the teachers, and he notes they're not even state employees. So there's some discussion, we'll see if it comes about or not, of moving those costs to local school districts. But that would precipitate, one would think, an increase in property taxes.
Sure.
Again, as far as trying to either maintain the businesses we have in Illinois or attract new businesses to move here, how much of an impediment is that as an issue?
I think it's a huge impediment. I mean, property taxes. You look at you look at any enterprise that's going to have a brick and mortar facility. You know, they're going to be paying property taxes on it. And here, I understand the point that the speaker made, and he's not wrong, but the shift doesn't fix the problem. I mean, it fixes the state's problem, but then you put that cost right back on, as you had noted too, Terry, right back on the local property taxpayers, and you know, it doesn't fix the problem. So what I would suggest may be happening, though, is there will probably be some combination of that effort, probably phased in over a period of time, and we'll see how that all shakes itself out.
Part of the conversation, too, and by the way, I just heard today, and it's an interesting statistic, and it came out of a press conference that Mayor Emanuel had with other mayors, that there are over 638 pensions in Illinois.
Okay.
We talk about 5 that are within the state. Now, you invest some monies as state treasurer for different municipalities, different taxing bodies.
Right.
Has anyone ever considered a thorough examination of the different pensions in Illinois, and to what extent should someone like the state treasurer have some authority over investing some of those monies so that we have some professional management of these funds, and to make sure, I will add as an aside, when I was doing local news 12 years ago, there was a very nice young lady who didn't have a college degree, working in one of the small communities around Decatur, who invested $2 million. And people, I think, are surprised to find that some of the local treasurers may not have to have any qualifications, but are investing millions of dollars.
Right. Well, let me highlight, though, that the state pension, the 5 state pension funds that you were referring to, those funds are not invested by the state treasurer. They have independent boards and oversight boards that do their investments. I deal with just the state portfolio, so qualify that. The idea of the the 600 and plus others that you're talking about, those are local ones. You know, I guess I got to be candid with you to see how things are screwed up with the 5 pension systems the state's got. I'm not sure if I was the locals, I'd want to turn it over to the state to do it either. No, there are standards out there and so forth. So, no, I would not suggest the state take those over.
Well, and I meant just as far as the management or perhaps some regulatory responsibilities.
Yeah, and I just want to, so our viewers understand too, the $5 to $6 billion of local funds that we do invest on behalf of local taxing bodies, whether they're, school districts or counties or townships or cities. What these are would be their general funds. That they and we do it for them because we've got a professional team. We do it at a discount rate and so forth for them to help leverage the return.
And I am going to just again to go back to your time in the legislature.
Sure.
You have obviously a lot of experience as far as the political realities, the political landscape. One of the reforms that we periodically hear, in fact, there was a effort this year in the legislature, is to go from Illinois having a flat tax to a progressive tax, as the federal is, so you tax wealthier people more. The other reform on taxes we sometimes hear is that that we tax our economy in Illinois as if it's 1950s and we're still a heavy manufacturing, when so much of the economic activity these days are services, and we don't tax those. What's your thought as far as do we also need to reform the tax system in Illinois? Are we ever going to be able to have enough revenue just based upon the current structure of the tax system? Just give us your thought.
Yeah, if you just look at the revenue side, that relieves the pressure valve of trying to fix the spending side, and I mean so. I guess right now keeping things a little tight is probably good to try to get this whole issue on the pensions, for example. If that isn't a pressure point right now, bringing in more revenue, there won't be a pressure point. There are a number of areas. I do not find a problem with a discussion on all of the things you said to have a better comprehensive view of where we maybe should be going, but it's very difficult to get those types of things going in this capital city. You look at one area that I think is a very fair thing is a debate that's taking place in the United States Congress right now in regards to be able to tax products that are sold on the internet, and to trail that back. I mean, and I know Amazon and whoever else, but I mean, there's all kinds. There's a multi-billion-dollar economy that's taking place, and I don't see that it's fair for the brick-and-mortar retailer that has to collect the sales tax and be paying property taxes, that the same item being sold by somebody else is not paying the sales tax on it. So, I mean, I think that's one thing that definitely merits getting resolved, and hopefully we can have our colleagues in Congress work with us on that.
We'll close out. I'll let you, if there's something I've missed, you can address it, but I would say, what would you say morally to those who are the beneficiaries? To say, is it fair that I've worked at the state, I've been working for years, based upon an understanding that I was going to get one package deal as far as benefits, and now the state, they might say, is pulling the rug out from underneath us?
Well, I would say that if you're a retiree, what you have coming is yours. If you're in the system, what you have vested is yours. The reality to it is that this thing is a major problem, and if you intend to have a retirement system, we need to be sure that it's going to be fixed, and it needs to be fixed fairly. It needs to be fixed fairly for the retirees and the participants. Without a doubt, it needs to be fair to them, but we also have to understand the realities of addressing a problem that has got to be fixed.
State Treasurer Dan Rutherford, we appreciate you sharing your thoughts with us.
Thank you. It's good to be back on with you, Terry. Thank you.
You're watching the Illinois Channel, an independent nonprofit corporation formed to provide gavel-to-gavel coverage of Illinois state government and other public affairs events taking place across Illinois.